I have this story that I have used a lot, and I've posted on LinkedIn before, like the story of the chocolate chip cookie.
Oh,
Like you have a great chocolate chip cookie recipe, right? And you
yeah.
you serve it to your family. Your family loves it. Then you decide to bring it to your friend's house for a party, and everybody loves it. And then your friends and are asking for you to bring it to the party. And so then you think, okay, maybe I can actually sell them, and I'll take them to the farmer's market, and you're very successful and sell it every week at the farmer's market. And then you go to your local store, and it's like you're almost in too deep before you figure out all these problems.
Yeah.
And then you go to your local Stop and Shop. Well, they're not going to take you because
Yeah.
you can get into a boutique, and it's by the time that you know what's actually happening,
Mhm.
you're either have to go for it totally
Yeah.
or give it up altogether.
Welcome to the Inside the Fund podcast, where we go on the other side of the table and learn about capital raising from the investors who back early stage founders. I'm Helena Fogarty. I'm a fundraising expert who works with startups on their seed and Series A rounds. And today I'm speaking with Katie Dunn, an active angel investor and advisor to emerging consumer packaged goods and technology companies. Katie brings a unique perspective to early stage investing, combining her operational experience building companies with her passion for backing underrepresented founders. She focuses on investing in pre-seed and seed stage startups, particularly in sectors where technology can drive meaningful social and economic impact. What sets Katie apart is her hands-on approach. She doesn't just write checks. She rolls up her sleeves to help founders navigate product market fit, their go-to-market strategy, and build the foundation for sustainable growth. Her investment philosophy centers on backing mission-driven founders who are solving real-world problems. And she's known for being one of the most accessible and founder-friendly investors in the ecosystem. And today we're going to do something we've never done before on Inside the Fund. Katie has created AI twins of herself, AI avatars that founders can actually interact with to get investment feedback. And we're going to test it out. We're going to talk to one of them later in the show and see how AI is changing the future of investor-founder interactions. Thank you so much for being on here today.
Thank you so much for having me. I'm really excited to be here.
Me too. And I'd love for you to just take us back a little bit to your origin story. Like, who are you? How did you get to become an angel investor?
Sure. So I was a commercial real estate lender for 25 years, and I was underwriting loans across the US from $1 million to over $1 billion. And one thing that I was always doing in underwriting these deals is you have to look at the tenants in the buildings and the businesses that are operating to make sure that they're profitable and they can pay the rent so that the building owner can pay the mortgage. So that was one of my most favorite parts of my job. I got to see these crazy businesses and tour the spaces. I've been in Amazon spaces that you cannot, like, no normal people can go into because I underwrote a mile-long Amazon warehouse in Phoenix.
Sure.
So, like, really cool stuff, and just got to really dig into the financials of all these different businesses. And when Uber went public and the news came out that people that invested pennies got millions, I was like, how does that happen? How does one get into that? And I didn't really do anything about it at the time. And I didn't really know the language around it. I was always investing my money. I invested in real estate. I invested in stocks. I even produced a movie at one point. That was sort of my real entree. I had a friend that was a family friend that was a writer and director and doing an indie film. So that was my gateway. I really thought I wanted to do that. And then I made no money from it. So it was a great lesson. So fun. Super proud of the movie. And then shortly after that, I had my first real angel opportunity.
Mm-hmm.
And that was with an Irish spirits brand that my friend that I worked with, it was his brother-in-law that was starting it. And my friend came to me, and we worked for a bank at the time, and you have to get permission to make outside investments. So he said, I know you know how to do this. Can you tell me how to get this permission? And I said, I'll tell you, but you got to tell me what you're investing in. And then he said, it's a gin. And I said, I want in. And so that was my first foray into the world. And I started really going deep. And I joined Chief, which I know you were a member of as well. And networked within there to find other angel investors, venture capitalists. I found an angel investing class that I took, like all those things. So that's really how I got into it. And I took very naturally to it because of my finance background. I understand what metrics mean. I understand what the numbers. It's just learning the tweaks of the language. I know how to read contracts. I know how to read legal documents, all that kind of stuff from my training. So it all came in really handy.
Yeah. So I'd love to hear the name of the gin brand.
Oh, yes. Blood Monkey Gin.
Nice.
We now have a second product, which is Two Shores Rum. Both have won major awards. So Blood Monkey I was just talking to the founder yesterday. We're in 11 countries across the world. One of our SKUs won Best Gin in Ireland. And then our rum is called Two Shores Rum. We take it from Panama and then bring it to Ireland to finish it.
Yeah.
So Two Shores. And we won Best Rum in the World like 2 years ago.
That's amazing.
Yeah. Last year. Yeah. Yeah.
That's amazing.
Super cool.
It's really interesting to see in Central America, like the culture of like sugarcane alcohols that have different names. And like, I've always wondered, why, like, because I have deep roots, I guess. I have married family. I've married into a family in Costa Rica, I guess.
Oh,
So,
cool. Yeah.
they have the cacique, which is a sugar
Yes.
cane, but you never see that anywhere else.
Yeah.
So it's very cool to take something from Panama, finish it in Ireland, and wow, amazing. So where can we get these products?
So they're widely available in New Hampshire right now, but online. Yeah.
Awesome.
Yep.
I like gin, so
I'll get
I'll
you
look
some.
into that. That'd be, oh yes.
Yeah.
That was my whole plan.
Yeah.
Shout out, get a free bottle of gin. Nice.
Exactly.
Also, I think we want to give a shout out to Kate Braddock.
Kate Braddock, yeah.
For her angel investing class.
That was the class.
Yeah.
That was the class. Loved
Amazing.
it. It was, through her company Switch. It's phenomenal. And it's a whole angel ecosystem. And we share deals. I actually now have done 4 syndicates with Kate that Kate and I have co-led, and she's just an awesome partner. And so such a wealth of knowledge. I love what she's doing. So.
And where do you run those syndicates on? Is there a particular platform?
Sidecar.
Okay, cool.
Yeah.
Shout out to Side. See, we're getting on
Yeah.
this side.
Yeah.
Nice.
Yeah.
Excellent.
They're great. They're huge. She's got a great relationship with them. She was an early adopter, so we get good rates.
Nice.
And we can pass them on to the syndicate, so it's good.
And in terms of your background, like, did you study business undergrad? Do you have an MBA? Like, what did you study to prepare yourself for underwriting huge deals in the real estate world?
So both of my parents were in real estate. My dad was in commercial real estate. He did everything from property management to development to even corporate real estate. And he worked for a REIT at one point. And growing up, I worked for his company. So at 12 years old, I went to his office and I was stuffed leasing flyers that were sent out, and then my sister and I would run them through the mail machine.
Yeah.
So once I could drive, I started working there full time in summers. I would answer the phones. I would be the mail girl. I would stuff envelopes. I would do whatever. So I really absorbed like what was going on, and I loved the people. I loved the energy. I loved doing deals, and so I was a finance major in college. I had a second major in what was then called computer applications. So you know how old I am. And I loved it. It was great. And so then I really wanted to be in real estate. And I always said when I was young, I always wanted to be on the financial side of real estate. Yeah. I didn't know what that really meant at the time, but I figured it out and I got there, and I loved doing deals. I loved it. I love the energy of starting something new, getting it done, and then moving on to the next thing. And that's a lot of angel investing too, and working with founders. I like to be able to bounce and learn. Everybody I talk to, I learn something new from. It's awesome. There's nothing better.
And where did you grow up?
I grew up in Minneapolis.
Oh, cool.
Yeah.
I had no clue.
Yeah.
Wow.
Yeah. Loved it. It's
amazing.
Great place to grow up. Yeah.
Fantastic. My sister-in-law's from Minnesota.
Oh, yeah?
Yes.
Yeah, it's the best.
Very cool. So you started angel investing.
Mm-hmm.
And how's it going?
It's going okay. There's good and bad. So I'm 29 investments that I'm up to now. I've had I just found out one officially failed like yesterday, and the founders saying they're going to try and do something else, and I'm like, I don't know. I just might take the write-off. But it's I have 2 that are looking to exit this year, so those will be my first exits, which I'm really excited about. And but it's, a lot of ups and downs, and it's a lot of I'm learning so much more as I go through. There's decisions that I made early that I would never make today. And everybody says that. And as much as I I listened to Kate and I listened to other angels and studied and stuff. I thought my gut was right, and it wasn't.
Yeah.
And I should have listened to my gut a little bit better.
Yeah.
On a couple.
I feel like a lot of times when we're getting into something new, whether it's a startup or whether it's, investing in startups, like you're paying for an education.
Totally. That's how I looked at the movie too.
Yeah.
I look at that as an education in movie production. And it was, the producers were so great. I mean, they involved me a ton. They were like, anytime there was any casting thing happening, they would call me and say, "What do you think?" And not that I knew anything, but I just, they were so kind and involved me. So that's the same way I look at the deals as well. It is always learning something new and learning alongside. And then there's some things that now I have a little bit more knowledge on because of years. Like I know a lot more about beverage and especially alcohol products that I can actually be helpful to people starting out that are in that world that don't necessarily understand all the costs that are going to go into distribution, and that distributors don't actually sell for you. You still have to have salespeople, things like little things like that. So, yeah.
I was about to go down the distributor kind of business model discussion, but we don't have to go there.
It's a very big point of pain. I hate the 3-tier system.
Yeah,
it's awful.
It's killer in CPG and food and beverage. Like it's killer.
Yeah. I mean, there's so many horror stories of even small food founders that are like, "Oh, I got into KeHE or UNFI and I, I'm so excited, and I'm going to be in all these big stores, and they're going to give me access to all these stores." Well, you still have to sell into them, and then you go to the store, and then they're like, "Okay, here are your slotting fees, and here are the discounts you need to provide, and then here are all the distributor fees," and then they think they're going to get a check for $50,000, and it's 1 cent. Yeah. Like literally, that happens a lot. So it's be careful what you wish for. I was talking to a founder. It was Female Founder World on Sunday. Yeah. And there was a party afterwards, and there was a founder that had like slipped me. I did a mentoring, 2.5 hours of mentoring there. So this woman came up and like slipped me some packages. I didn't even know what they were at the time. It was like, "I want you to try my product." And okay. So it's protein sprinkles, which is kind of interesting. And so I went to this happy hour afterwards, and she was saying, I've got all these opportunities to go into all these places. I was like, "Slow down. You started 5 months ago. Like, yes, you probably have a great product, but there's something to be said for keeping it D2C and Amazon and growing and figuring out your model, figuring out the kinks, finding a better co-man to produce your product at a lower cost, all those things. Like just work out some kinks before you try to go for Target, for example." Right?
Yeah. Yeah. And do you think that there's space? I don't know if this is your expertise. It's something I've been thinking about quite a bit. Do you think there's space for brands to build food and bev, to build their D2C and their Amazon to get more power when they're dealing with, the large chains?
100%. Yes.
Yeah.
Absolutely. There's a founder that I have been working with for a couple of years now she actually worked at Amazon, and she has a big leg up on how it operates. So but she's now, full-time in her business, but she's going D2C, QVC, and Amazon. Yeah. And now she's talking to Target. Yeah. And so she can talk to them about like all of the success that she's had, and she's got some recognition. She's got some brand recognition already. Yeah. Target's notoriously difficult for early stage brands. They want so many things. I mean, they're even talking to her about maybe changing her packaging. Wow. So it's, they've got that kind of power. Yeah. But her whole plan is, I want to get into Target, and then I want to get into Walmart, and then I want to sell. So she's executing on a very specific plan, which I love because she's got it all dialed in.
Yeah. And if you can get direct relationships with Target, it's better.
Yes.
Same with Walmart, same with any of the big chains.
Yep. Yeah.
But yeah. Well, thank you. I appreciate that because it's something that I've been thinking about quite a bit. And I know there's a noodle brand called Immi that did that. They were D2C for years before they ever went into grocery store. Yeah. And It's a good product too. It's delicious.
Yeah, and then
Protein infused, like protein focused ramen. And
I would love
yeah,
that. I'm sure.
yeah.
Yeah, but there's so many. When you can assemble your customers and have them go to their local stores and say, "Why aren't you stocking this? I will buy this every single week."
Yeah.
It's so much more powerful in negotiations for the brand owner, so that maybe they're not paying the slotting fees, maybe they're not paying giving the discounts off the bat, right?
Because it's a
It's
lot.
expensive.
Yeah. And every time there's a promotion, that just takes your invoice payment down.
Yep.
And you don't know what you're going to get paid.
Yep.
Yeah. I took over for a company that where the founder broke her back building an amazing company, but had to get spinal surgery. And so hired
Literally broke her back.
literally broke her back.
Oh, I
She
was
worked
like,
me.
the
No,
company
I know.
broke her
It's
back.
like
Yeah,
mentally, I was coming off a failure, so I was mentally and emotionally and financially broken, but she broke her back.
wow.
And I was shocked because my background had been in fashion, and I knew how like Saks Fifth Avenue got prosecuted for using chargebacks as a profit center.
Yes.
And I thought that fashion was the most corrupt world. And then I got into grocery.
Yeah.
I was like, oh my God, this is terrible.
Yeah.
Yeah,
Yeah,
it's rough.
It is rough.
Yeah.
I have this story that I have used a lot, and I've posted on LinkedIn before, like the story of the chocolate chip cookie.
Oh.
Like, you have a great chocolate chip cookie recipe, right? And you serve it to your family, and your family loves it. Then you decide to bring it to your friend's house for a party, and everybody loves it. And then your friends and are asking for you to bring it to the party. And so then you think, okay, maybe I can actually sell them, and I'll take them to the farmer's market. And you're very successful and sell it every week at the farmer's market. And then you go to your local store, and it's like you're almost in too deep before you figure out all these problems.
Yeah.
And then you go to your local Stop and Shop. Well, they're not going to take you because you can get into a boutique. And it's by the time that you know what's actually happening, you're either have to go for it totally or give it up altogether. It's
and
tough.
It's this huge excitement because you're like, Publix once, is putting in a $50,000 PO.
Yeah. Right.
Amazing.
Yes.
But if you don't have any power in that negotiation,
you're not going to see
you're
anything.
going to lose money.
Yep. Yep. And if you're down at the bottom of the shelf and nobody's looking at you or looking for you, you're going to sit there.
Yeah. It's a complicated. So what kind of founders or opportunity get you really excited?
People ask me this all the time, like, what kind of founders do you look for, that kind of thing. I like people that are really, really passionate about the problem and like beyond dedicated to solving the problem. I want them to have personal experience that has to drive them. And the reason why is because I feel like that mission is what's going to push you through the hard times. If you're not totally solely focused on solving the problem, you're not going to be able to execute on it. I think Sarah Blakely said this, and I actually screenshotted it. She said something like, don't be obsessed with your solution, be obsessed with the problem. Yeah. And that's what will, drive you. I see a lot of founders that get distracted with the shiny object syndrome. You've got, I've got this opportunity to do this, or I've got this opportunity to do that. And, or they're like, I'm going to start a founders community, or I'm going to do this because it's going to give me a little bit of money. I'm like, you got to focus on your business. People get confused. If you start talking about all these different things, focusing on one thing, the problem you're solving, the solution you're bringing, and your customer, and it needs to be about the customer too, that's what's going to win. So I like to look for founders that have some life experience, if you will. Like, I love young founders are great, but I like people that have experience in the industry that they're building in, some business experience, some leadership experience, that kind of thing, so that they've got a little bit more to draw upon when things get tough.
Cool. And how do you source deals?
A lot of things come to me. I'm very, very lucky that way. Too much comes to me. Things that don't fit my thesis come to me. So Kate Brodach's group, I get deal flow from. There's another group that I get, a couple other groups. Girl Math Capital. Do you know those women? Oh, you should talk to them. They're great. So Girl Math Capital is all about teaching women how to invest in alternatives,
Cool.
angel investing being one. So I'm on their list. Just other founders that I've invested in. Oh, you should look at this. Founders that I've known for a while, founders I've worked with. I've invested in a couple founders that I've advised for when they, if I really like them and they fit my thesis. So it's all different places and friends. It comes out of the woodwork. If you put angel investor in your LinkedIn profile, it'll just fly to you.
So how do you manage that?
I don't manage it well.
Because I'm like drowning.
I'm drowning too. So yeah, in fact, this is like one of my biggest pain points. So I am a big believer of founders get ghosted all the time, and I don't think that's right. So I make it my mission to answer everybody that reaches out to me, and 99% of the time, 99.9% of the time, they don't fit my thesis. It might be close. It might be I've invested in competitor. I don't invest because I'm just one person that's managing my portfolio. I don't invest in competitors because I don't want people to think I'm sharing things between founders or whatever. I'll invest in adjacent. Like I have I've invested in Juliet Wine, which is never going to go into spirits. The spirits brand's never going to go into wine. So they're very complementary. So anyway, I have a lot of canned responses that I give, frankly, in my DMs and emails. Thank you for reaching out to me. This isn't a fit for my thesis, but I'd love to be helpful. And then this is where the digital twins come in. So that's something I can offer them. This is a way you want to talk to me, or you want to, I get so many people saying, can you just look at my deck? Or can I take 15 minutes and pick your brain and read my, pitch to you?
Yeah.
If I did that, I couldn't do anything else in the whole world. So that's why I developed the twins, because they can be helpful there. They can answer certain questions. You can talk to them just like you would talk to me. You can pitch to them just like you would pitch to me.
Yeah. Yeah. It's challenging.
Yeah. There's got to be a solution out there. I think there's like a forms. I saw somebody else had it, and I had saved the website. You know how I have a bazillion tabs up. I had the tab up and then it went away, and I can't remember what it's called anymore. But I'm thinking about doing some sort of kind of decision tree type experience so that hopefully people will feel like I'm still answering them. And, that you could say, like, go through a decision tree if you fit my thesis, and then I'll talk to you. Or you want help, you want my advising services, you go down this route, or you could go to the digital twins.
Yeah. I think the hard thing as well is when someone's like, can you just give me feedback on my deck?
Yeah.
You don't know if that's genuine or not. Like
100%.
Because I mean, we all know.
Yeah.
Like, ask for advice, get money is like a good saying.
Yes.
I don't love that saying.
Yeah. It's true though. It's so true.
I guess I just prefer to be so much more clear.
Well, I think ask for money, get advice is probably the most true.
Yeah.
More true. But yeah, I don't like when people do that to me. I say, hey, I've already told you no.
Yeah.
I did this call because of whatever, but no, now you have to hear it twice.
Yeah.
So, and that's the thing I say to them, because it drives me bananas to have to say no to people.
Yeah.
I've had to say no to people like 3 or 4 times. Like I've said no. Don't make me say it again. It feels bad for me too.
Yeah.
I know you don't want to. It's not what you want to hear, but it makes me feel bad too.
Yeah.
So it's very frustrating. Yeah, and I'm also on the platform Hubble. Are you on Hubble?
I'm not on Hubble.
Oh, I got to get you on Hubble.
Yeah.
You'd be great on there. So, and I have it in that profile. That's where people can discover experts in all different kinds of things and book those experts to get advice. And it's mainly focused on the startup world. I've met some incredible founders, but the first thing in my profile is do not book me to pitch me. I don't take payment for pitches. So if you fit my thesis, DM me on LinkedIn with these things.
Yeah.
So a lot of people will do that. And then I can say, yeah, but if you really want my advice, happy to do it. You can book me live, or you can use my digital twins for much less.
Yeah.
They're much less expensive than the real me.
But I love that you're so clear.
I try to be. Yeah, I try to be.
Yeah, because it's hard.
It is. People don't. I think as much as I shout from the rooftops, check an investor's thesis before you reach out to them. Founders don't do it. They think
No.
that there's a chance,
Yeah.
that they'll get your attention or that you'll invest in them anyway.
Yeah.
But it doesn't happen. I'm sorry. For me, it doesn't happen.
I feel like you've got to check the thesis. You've got to check that they're actively investing. And I mean, yeah, it's more when I'm putting together an investor list with a client, it's like, are they active? Do they lead? Do they invest at your stage, your round size, your sector?
Yeah.
Like the basics.
Where are they in their round? Are they raising money?
Yes.
Are they at the end? Are they saving money for follow-on? Yeah, there's so much more that goes into it. Absolutely. Yeah. Even with and everyone's like, well, I just need a list of investors. Okay. Good luck. By the way, Google it. There's 1,000 lists out there. You don't need me to give you the lists. There's 1,000 lists you can find, and that's not going to help you in any way.
Yeah. Yeah. And something I keep saying is that I feel like, yes, warm intros are getting more and more important, but it's also about like developing relationships. Like a few years ago in 2021, when things were really frothy and hot, it was like binary. You're raising or you're not raising. And you could just say, I'm not talking to investors right now. I know some people that said that, right? At this point, I think we've gotten to the point where you really want to find people that are interested in what you're doing and bring them along. And it doesn't mean starting the timer on your raise early. It just means like developing those relationships in advance.
Yeah.
Yeah.
I tell people that all the time too. It's the, hey, I just want to get to know you, or, see if this might be interesting, or connect with you, be in the same room with you. And it works. That works because, put you on I tell people all the time, put investors on your investor update list that aren't invested in you.
Yeah.
They will see your progress.
Yep.
And then it's touch points. It's reaching out, building the trust, building the relationship, just like dating.
Yeah.
Like, have you can't trauma dump on somebody in the first date. They're never going to talk to you again. Right. So you've got to develop the relationship, court them. And then when you're ready to ask for the ring or propose the ring with the ring, you're going to get a yes because you've developed that relationship, and it makes it easy for people.
And then you can trauma dump.
Yeah, maybe then you can trauma dump. Then the person it has all the fear, and it's awful. That's happened to me before, honestly. I wrote a check and then got trauma dumped on. I was like, oh my God, what did I just do?
Yeah, it's rough.
Yeah.
Yeah. It's and I think that when you're evaluating people that are reaching out to you, because you're overloaded, or because you might be searching for that filter, right? Like thesis, yes, no.
That's what I start with. Yeah. The way I say it is I look for reasons to say no. So I sort of have a list of what type of founder are they, stage, company. Do I think they're solving a real problem? Do I think the solution is going to work? Do I think they are I think they have enough industry knowledge to execute on this? And then like probably one of the last questions I'll ask is check size. Like, because a lot of times you don't want to waste your time having them pitch if they're like, I only take $100,000 checks. Like, well, I'm not writing $100,000 checks right now. So don't waste your time with me. Move on to the next person. But that's what I want them to founders don't understand that. They think they're going to convince you, and it's not. I'm just saying, you have to have a pipeline. You have to have a full list. I got the cross out this time. That's okay. Move on to the next person.
Yeah. It's like enterprise sales.
Yeah.
Yeah. It's anyway, it just hit me.
Yeah.
So how do you evaluate funders when there's not so much traction, when they're really early?
I look for like founder market fit. And that, do they have experience in what they were doing? Do they have a lot of followers? Are they already talking about this? Have they worked for a company that did something similar, and then now they're going to solve a problem that company didn't want to solve? I also look for things like LOIs, letters of intent. Do you have those people ready to go? And it doesn't need to say like, I will write the $50,000 check the minute it comes out. It can say, I will consider purchasing this product or subscribing to this product or whatever it is. Email lists, how many people do you have in your email list? How many followers do you have? Those kinds of things that knowing that you have an audience ready to go to buy,
Yeah.
you can prove that out.
Yeah.
And be talking about it. Like I am a big believer in building in public and having, especially on LinkedIn, where investors are lurking and following and talking to each other and talking to other founders. Like, be where they are and tell them what you're doing. There's a lot of people out there building in stealth because they think somebody else is going to steal their idea. And no one can steal your level of execution. That's what they need to be worried about.
Yeah.
Is not the idea. I have an idea, I have a great chocolate chip cookie, but there's no way I'm going to go execute on it. You know what I mean? Like that's the same kind of thing.
Yeah. I get that. I think that there's also this, as you said, like this moat or this difference when you have the distribution already built in,
Yeah.
like founders distribution. If you have that.
Yes. That's a great way to say it. Yeah, absolutely.
It's becoming more and more important community. Like,
what's your
just the
network
way-
look like?
Yeah.
Mm-hmm.
And that's also a great way to get customers. Like it helps you in everything.
Totally. Yep.
You learn more, you dial in what your product is, and you get an audience that are hungry for what you're creating.
Yep. And it's so easy for tech today. Like people would say, well, I need the money to build it. No, you don't. Lovable, Replit, you name it, Emergent, like all these other things that are coming out, they're printing money because people are building things that you can test with and see if it's actually going to be something.
Yeah. Yeah. I spent maybe 10 minutes on Replit and I was like, oh my gosh, this is incredible.
Yeah. I want to play with it. I need like a weekend or maybe.
It doesn't take like the initial to be impressed doesn't take long.
Well, I want to see if I can build out
something.
my like decision tree for talking to people. So.
Yeah. I think that's a great idea.
Yeah, it'd be fun.
Yeah. There's a couple projects I have in my head that that I want to play around with. But it took me 10 minutes just to be like, ooh, this is powerful.
Yeah.
This is really cool. So when do you think people should be thinking about valuation and the terms of their deal? And how should founders be thinking about that?
That's a tough one. I think, so I invest so early stage, most of them are on safes. And it's generally around, $5 million cap and a 20% discount or 15% discount, whatever. And that seems sort of the sweet spot of where everybody's at. But I do think that not enough founders know how to look at it and look at find real comps to what they're doing. So it's depends on your company if you're looking at revenue or EBITDA and what your multiples are of that. And as well as, one source I always think is a good one that people sleep on is lawyers. Lawyers see so many valuations because they're writing up the documents, right? So I'm always like, talk to your lawyer. What do if they're honed in on startups and a certain industry, they're going to have all the numbers, because it's people, I don't subscribe to PitchBook or Crunchbase. I can't find the numbers. You've got to figure it out. You've got to do that due diligence. Like look at what other people raised at when they were at your level. But then you have to your point, if somebody in 2021 raised, their valuation's very different than 2025, right? Yeah. It's just where you are.
Might be getting there, but it's still different.
Yeah. So but where you, like in 2021, you could raise on an idea, right? And it was just like people throwing money. Now you've got to have the MVP built and some form of traction and whatever. So, but yeah, I wish more people would do their due diligence on that rather than just saying this. There was a company that I saw, and I'm trying to think of more details, but they had nothing, literally nothing. And they were raising at a $15 million valuation. And I was like, you're a first-time founder. You have no product. You're not showing me any way that you're getting customers. Your go-to-market strategy is like, we're figuring it out. And you're raising at a $15 million valuation.
Yeah.
Good luck.
Yeah.
So
not the deal for you.
No.
Absolutely. How do you feel about the right lawyer for the right stage? So this is something I think a lot about, and this isn't a normal question, but like when I'm working with founders, I want them to have a lawyer who specializes in, pre-seed, seed,
Yes.
Series A startup fundraising. But I want them to be accessible, both in reaching out and being available, explaining things in a way that they can understand, and also accessible in their fee structure.
Yeah.
And then we have these big firms who see all the deals, so they have all the information.
Mm-hmm.
But sometimes you're not dealing with the person that you signed up with. You're dealing with, an associate or someone a little bit lower. How do we find the right lawyer for you at the right stage?
Yeah, that is tough. I'm a big believer in lawyers. I love lawyers. Some of my best friends are lawyers. They were my biggest partners in my banking days. Like I was on the phone with lawyers all day long negotiating documents. So I'm a firm believer that paying legal fees is an investment in your company, because the problems, if you don't, the problems that you're going to fix later, they're going to cost double, triple, quadruple what you would have paid in the first place. There's actually a startup that I'm working with right now. Her name is Marla Miller. The founder is Marla Miller. Her company is called 9 to 5 Docs. Play on Dolly Parton.
Cool. Yes.
Go Dolly.
Yeah.
And she's a lawyer. She's done everything, corporate, tax, the whole thing. So she's been focusing on startups for the past few years. So she's developing an AI platform that has a bunch of forms, plus you get a lawyer in the loop, which I think there's a lot of really good things about AI with human in the loop businesses.
Yeah.
I think that's going to be the wave of the future, is just to make sure that somebody's gut checking this stuff, right? So I really like that model. There's another firm, Romano. Do you know Shalise Romano? So they're based in New York. She's got a retainer basis for startups where, because she knows this exact problem, some months you're going to need them a ton. Some months you're not going to need them at all.
Yeah.
But paying those huge bills all in one month is tough.
Yeah.
So they have a program where you can spread it. It's just monthly.
Yeah.
You know exactly what the cost. It's like a chief legal counsel at a flat fee.
Yeah, that's cool.
Yeah. So, but yes, I'm with you. You have to have somebody at the stage and that knows something about your industry too.
Yeah.
It's not, you can't have a tech lawyer doing a CPG deal or vice versa. And you can't have your friend that's a real estate lawyer doing your safe note.
Right.
They've never seen a safe. Trust me.
Right.
I know. They have no idea. They don't know what safe stands for. So
they're going to make you do a convertible note. They are. Seriously.
yeah.
So I love that point of view, because that's something that we struggle with all the time. And it's like, how do we make a recommendation? And I've been a leader in some accelerators that say the big, and the big ones will come in with a deal. But I just don't know if you need that hammer right away.
Yeah. I mean, there's a lot of power in having a firm that can take you the entire way. So I like that, like Cooley or Oric we were talking about earlier. So some of those firms that they can work with startups and they can take you public. So you've got consistency. You will be shuffled because that lawyer is not going to take you the entire way. They're going to pass it off to their other partners, but that can be great. Like just that consistency. I say that with a bank too. Like I love JP Morgan for the fact that they have a startup banking platform and can take you all the way to go public or to a merger or to an acquisition or whatever it might be. So I think there is nice things that are great in consistency and building relationships. I saw that as a banker myself. People with banking, the relationships with us as a bank, they got special treatment all day long.
All day long.
We did deals that we would never do. We gave them better rates. We gave them better terms. Relationships work.
Yeah. I think it's the killer.
Yeah.
Literally.
Totally.
And that's coming from me as an introvert, and I don't like to talk to people, but I like deep relationships.
Yeah.
And I like loyal relationships.
Yeah.
Yeah. As an angel investor, how do you think about your portfolio?
I was very intentional from the start about what I was going to invest in, because that was one thing I learned in Switch. And I, at first, was a little bit, would get distracted of, oh, this seems interesting, and this seems interesting, and this seems interesting. And then the light bulb goes on. You're like, I can't be interested in every single thing. I can't be helpful to everybody in every single thing. Yeah. I can learn a lot more if I go deeper on beverage, for example, which I have done. I can, the B2B SaaS or enterprise SaaS. platforms like I can be more helpful on because I know more about it. So that's what I'm very hands-on, very much want to be involved and help my founders in every way I can. I know some founders, the founder-investor relationship can get contentious because investors want you to scale at all costs. They want to make money. They want you to go build so that you can execute and make them a ton of money. But I'm on your team. So I'm trying, I want to be helpful, whether it's introductions or resources or whatever it might be. I want it in some way to be helpful. So that's why it also gives me reason to say no to all the deal flow I see. I have to have parameters. Otherwise I'd be looking at 1,000 deals a day.
Yeah. So what does that look like with the startups you invest in? Like, what kind of cadence do you have in terms of talking to them?
It depends on my relationship. So if I've invested through syndicates, I try to be respectful of the people that run the syndicate and go through them if I have questions, or go through them if there's opportunities. Or I invested in Dessois, which is a non-alcoholic spritz, canned spritz, or they have bottles too. And somebody reached out to me and said there's an opportunity to sponsor this really cool upscale event. So I emailed the lead of the syndicate to say, hey, this could be great. I'll let you take it to scout the founder. And then other people, founders I have calls with all the time. We're on text, we're texting, depending on what they're going through and if I can be helpful, I want to be there for them.
Yeah.
And I want them to know that I am available and I am there for them. So it just depends. So there's some that I just get the investor updates and I'm like, okay, awesome, great. And I always encourage everybody, first of all, to do investor updates. They have to be doing investor updates. And the other is to have an app.
Quarterly.
I think it depends. I'll take quarterly if things are humming along and you're not raising money and you don't have like a dire ask.
Yeah.
But every single update should have an ask section. And then the other one is a thank you section. So-and-so helped me with the ask from last month or last quarter. Thank you so much. This is what happened. Because people have egos, right? And they're like, wait a second, what I want to get in that investor update. So I'm going to help you with that little thing that you asked about. So I think it's anything you can do to continue to build the relationship. That if you are not continuing to build the relationship after the investor writes the check, you are killing yourself, because they're not going to invest in you again. And your best investment opportunity going forward is the investors that are already on your cap table.
Yeah. Do you do follow-on investments?
I have, yeah. Yep.
And how does
It
that
depends.
happen?
Yeah. It just depends. There's some deals that I have pro rata rights written in. There's some that I don't. I like to, there's certain companies that I've probably done like 3 or 4 rounds. There's others that I haven't. I'm not going to throw good money after bad.
Yeah.
So it's not necessarily bad, but I don't see the progress that I wanted to see, whatever it might be.
Or maybe it's just not the right time.
Yeah. And it might not be the right time for me. Yeah.
So as an angel investor, are you ever worried about getting pushed out of a deal, or when the institutional VCs coming in, getting less, like having your investment devalued?
Yes, but I also hope that it's so big that it's still going to be a big number for me.
Okay.
It's do I look at every single thing and say, this, can I 50 times my original investment? Sure. Is that realistic? No. If I get 5, so like one of the companies that's looking at exiting, I think we're going to get around, they're talking 5 to 7 times. So 5 to 7 times my investment over 3 years. I think that's pretty good.
Yeah, it's pretty awesome.
I feel good about it.
Very cool. You're very hands-on with founders.
Yeah.
So what does that support look like?
It looks like a lot of different things. A lot of times it's intros, that they want intros to people. I am very intentional about my introductions because I want the other person. So first of all, always double opt-in, always.
Yep.
And if somebody came to me and said, I really want to meet Helena, like I would say, okay, why? What are you going to ask? What are you asking of her? And I would go to you and say, hey, this person wants this from you. Are you okay if I make the intro? So I want you to say no to me rather than them saying no.
Yeah.
So and then I could say it's not the right time for her, move on.
Yeah.
I also want to know the person really well and make sure they're not going to waste your time. So I want everybody that I'm making intros to, they know the person is not going to waste their time. This is a good lead because there's value on both sides.
Yeah.
So that's really important to me. And I have so many founders saying, like, people randomly that I'm connected with on LinkedIn but never have talked to me will say, hey, can you introduce me to so-and-so investor? No, I only make intros for people I know well or have advised.
Yeah.
So that's part of it. But in terms of general support, like literally on the way walking here to meet you, I have a founder text me saying, what do you think of this platform? I don't know if I should join. I think I could do this, but I don't know how much, if I have the time to invest in it and all, so we're literally going back and forth over text on that. And then there's Zoom calls or emails, whatever. It's just it's all of the things.
I feel like sometimes when people ask for an intro and you get a double opt in or you don't get that, like you get a no.
Yeah.
The person asking for the intro gets very upset. And it's like, it's just, you're getting the answer.
Right. Yeah.
Take them off your list. Like
totally. Yeah, exactly. That's exactly what I would say.
Yeah.
Yeah.
It's not gatekeeping.
No.
It's literally like getting you the answer in the most efficient way.
Exactly.
Yeah.
Yeah. If somebody's not investing right now, like that's what you want to know.
Yeah.
They're not going to write you a check because they're not investing. So
don't waste the time.
Yeah, exactly.
Come off your list.
Yeah.
What's the biggest lesson you've learned the hard way?
Not trusting my gut, and it's losing money.
Yeah.
I've lost money because I haven't trusted my gut.
Yeah. So, you advise, you invest. I know some recent examples of people who have been pitched a startup and then come in and say, well, I'm not investing, but I can consult with you and do X, Y, and Z.
Yeah.
How do you make that clear? 'Cause that's a rough one.
I don't necessarily do that. Like what I will do, what my answer back to the people, especially the people I don't know, is, well, first of all, I get a lot of outreach not from the US. I don't advise founders outside of the US. A couple in Canada, very selective, but usually not outside of the US because I don't know the African market. I don't know the European market. I can't make intros. I can't give you advice. I can't tell you how your documents should look. Like I just don't feel comfortable doing that. So, but I offer people my digital twin. I say, if people say, well, I see you also advise, what does that look like? Then I'll do it. Because, hopefully they've looked at my website. They know it says what I do. It says the things there. So I know there's a lot of people out there that use it as a lead magnet for sure. And it doesn't feel good to me.
No, it feels really, it doesn't feel on the right side of the line for me.
Exactly.
Yeah. I'm very big in Nigeria. Where are you big in?
Are you really?
I am.
No way. No, I don't know Africa at all. I get so much outreach from Nigeria and I know nothing. Yeah. I'm going to send everyone your way now.
No. I don't advise. I don't know much about it, but I do get a lot of income.
Oh, yes. Same. Yeah, same.
And wonderful entrepreneurs.
They have great ideas.
But I just can't.
I have no idea. Yeah. It seems like really cool stuff. Yeah.
Yeah.
Nigeria, India, Nepal. I'm big in Ireland because my spirits company is based in Ireland. So I don't know. It's just sort of I'm connected to a lot of Irish people.
Yeah.
A little bit in the UK.
That'd be the last name as well.
Yeah, could be. Could be. But yeah, Nigeria, that's exactly what I was thinking of when I brought up Africa.
Really smart, wonderful people.
Yeah.
But I don't have the expertise to be helpful in that situation.
Same.
So I would love to get your AI twin out.
Okay.
And give it a spin at pitching.
Okay.
Your AI twin, this idea of a fake company that I came up with.
Yep.
Welcome to pitch practice, but note this version of Katie won't go easy on you. Built from Katie Dunn's voice and no BS investor frameworks, this isn't about gold stars. It's not here to be nice. It's here to challenge you, pressure test your pitch, and call you out, kindly but directly, when you're vague, rambling, or not ready. Let's sharpen it. Ask me one question at a time for best results.
Cool. I'm Helena from Inside the Fun podcast. I'm going to pitch you a startup concept, and I'd love your feedback as if I were a founder coming to you for a pre-seed investment. My company's called Network. That's NEHTWORK. It's an AI-powered platform that maps and scores professional networks based on real interaction data, not just connections. Most people have LinkedIn networks full of people they never actually talk to, and we're changing that. Our AI analyzes digital communications, emails, messages, calls to map your actual network and score each relationship by engagement strength. Users can also manually tag their top 5, 50, and top 100 most valuable connections, which refines the network map and helps identify gaps and opportunities. We're based in Texas, founded by a founder who's already had an exit with deep enterprise sales experience who saw firsthand how broken most CRMs are at tracking real relationships. We're currently in conversations with Signal and LinkedIn to license our network scoring APIs. They want our technology to power the relationship intelligence features. We're raising $1 million on a $15 million post-money cap. We're pre-revenue but have a working product with 200 beta users, and we're seeing average engagement scores increase by 40% within 30 days as users start being more intentional about their networks. What do you think? Are you ready to lead our round?
All right, Helena, here's the thing. Your pitch is clear and you've identified a real pain point. Most people's networks are bloated and ineffective. I like that you're tackling this with actual interaction data, not just surface level connections, but I've got some concerns. First, privacy. How are you handling sensitive communication data? That's going to be a big question for investors. Second, the valuation. 15 million post money for a pre-revenue company feels aggressive, even with a working product and beta traction. Can you walk me through how you landed on that number?
Yes, I'll address the evaluation first. First, I'm a second-time founder, and I've had an exit at 350 million valuation and acquisition. And I have deep connections to enterprise sales. We're already in conversations with Signal and LinkedIn, so we're about to start revenue, I think. Secondly, in terms of privacy, we're working that out. What do you think we should do?
All right, Helena. On valuation, your track record and enterprise sales connections are strong, but investors will still want to see a clear path to revenue and defensibility. Conversations with Signal and LinkedIn are promising, but they're not deals yet. For privacy, you need to prioritize transparency and control for users. Think opt-ins, anonymization, and clear data policies. Investors will ask how you're mitigating risks, so get ahead of it. Want me to dig deeper into either of these?
Not right now. I'd love for you to tell me how does what we're talking about compare to other network AI startups?
Your concept stands out because you're focusing on real interaction data, not just static connections. Many network AI startups lean heavily on predictive analytics or surface level insights, but your approach to scoring engagement strength and mapping actual relationships feels more actionable. That said, the competitive edge will depend on how well you address privacy concerns and differentiate from giants like LinkedIn, who already dominate the space. How are you planning to defend your niche if they decide to replicate your features?
That's a good question and something we have to think about. I'd love to just jump ahead a little bit and ask what would make this a hell yes for you versus a maybe or a no?
For me, a hell yes would mean seeing a signed deal with Signal or LinkedIn to license your API. That would validate demand and show you're solving a real problem. I'd also want to see a clear privacy framework in place, something that makes users and enterprise partners trust you implicitly. Without those, it's hard to move from maybe to yes.
Excellent. I think I'm going to start talking to real Katie now, if that's all right. So how'd you do?
I think she did pretty well.
Mhm.
I think she's very good at identifying gaps, which is what I wanted her to do. Like that, especially this one. So this one is that we just tested was the pitch practice one. The other one is an ask me anything. So she's a little bit nicer and more just explaining issues and stuff. So this one was specifically created to identify gaps and to pick apart what you're saying, how you're saying it.
Yeah.
You didn't have a lot of buzzwords. She would have called you out if you had a lot of buzzwords in there. In fact, I should have probably told you, say that we're best in class and say we're disrupting the market and all those things. She would have been all over that. But this is not a real company, right?
Mm-mm.
Okay. Because Goodword is a company that I've invested in that is solving this problem. So I know this is I ran a syndicate for them and I invest in them and I am kind of a pseudo advisor to them. And so the things that they're doing are going to really solve these problems and building relationships and networks. And there's AI tools to pick out, like I can go on and say, who do I know in my network that's an investor?
Mm-hmm.
Who do I know that's a founder? Or who do I know that's a lawyer? Who do I know that's this? And that's been my struggle is I can't use LinkedIn in that way.
Mm-hmm.
And then, so that has that ability. And then you can also make notes, like really easily make notes. I met this person at Female Founders World on October 2025. So that note will stick there and that will help me remember if I ever run into that founder again, that's where we met. I'll know who they are.
It's wonderful.
Yeah, I'm really
It's
excited
good.
for it.
We're hoping we're going to have Caroline Dell on here in a couple of weeks. So that's super exciting.
She's an incredible founder. That. She's an ideal founder for me. And I've known her for years.
Yeah.
And so the reason I've known her for years, because she was a part of Chief, as you know, her resume is incredible. She has crafted herself to be a founder, working for Bain, then Lola. She was one of the first employees there, one of the first employees at Chief. She knows what scaling and building actually looks like from being in there. And then she came up with a real problem that needs to be solved.
Yeah.
And her co-founder is incredible, so fantastic. Can't say enough good things about him. Chief Technical Officer. He's great. So it's a great team. They have a great head of growth who's a former VC, Alex Chung. They've assembled such a powerful group, and I love them so much. The beta's out there.
Mm-hmm.
They're gonna start monetization in the next month. So
I've been signed up to be on the wait list for the beta for a while.
Yeah.
I'm wanting to know what they're doing because I just made that up as like a need.
Exactly. Yeah. This is gonna solve it. You're gonna be super happy. Yeah.
Now I got to move on to my next startup idea. Oh, too bad.
Yeah.
Too slow.
We'll get you in the next round. They raise their next round.
I'd love to talk to you about, I know you're focused on representation and diversity in your investments. How do you make that happen?
I'm very intentional about it. So I've only invested in, I primarily invest in women, people of color, LGBTQ. It's just in 2025, I said to myself, I've made exceptions in the past, and they have to fit every other thing, or I have to have a really good relationship with them, with the founders, and they do, so that's good. But it's not just an altruistic thing for me. It's actually an investment strategy, because if you look at the numbers, women there's facts all over the place about how women use money more efficiently, they're scrappier, and they get higher returns.
Yeah.
So for me, it's actually part of my strategy. I'm not doing this. I'm not giving these are not donations.
Yeah.
I am doing these investments to make money. I want to be super rich too, alongside these founders. So that's the whole goal. It's not a charity.
Yeah. What kind of advice would you give to people who are underrepresented or underestimated to creating the kind of network that they need to raise money?
Yeah. That's the thing I hear the most from underrepresented founders. Well, I don't have friends and family. They come to me for money. I don't have a network. I don't play golf. I don't know any rich dudes that'll write me checks. So, but there are other ways. You don't need to. That's not the only way. Mm-hmm. Building in public on LinkedIn, that's a start. You've got to get comfortable talking about yourself, talking about what you do, talking about your success, being transparent, sharing all of that information with people, because nobody's going to do it for you. Mm-hmm. Yes, I thrown out a bunch of names on this podcast. I have, because I pride myself on being a cheerleader and saying people's names in rooms that they're not in. Mm-hmm. However, not everybody else is like that. So you've got to be an advocate for yourself. So one is use the free stuff like social media to promote yourself. Two, there are founders and funders events. There's literally a group called Founders and Funders, which I love, that run by Jeff Erickson out of Salt Lake City. But they do events all over, and founders get to go and be in the room with funders. They do a lot of reverse pitch competitions where the funders are the ones pitching. So founders can say, oh, okay, that's somebody I can go up and say, hi, I meet your thesis because, like, you're in the room with them. Go to networking events with other founders. Get in the room with other founders. They're not competitors. They are allies. Like, look at them like, what are you doing to solve this problem? How are you meeting investors? Do you have any events I should go to? There's great, like Tori Hansen has an amazing list in New York of all the startup events that go on every single week. She puts out an email with billions of events.
Yeah.
So go to those events. Find a community, find your resources, go where the people are, meet them where they are. They are not going to come to you. So you have to be proactive in getting yourself in the rooms. Ask for mentorship, ask for advice, talk to people, go to events, show your face, post about what you're doing, all of those things.
Yeah, I think there's two things that I want to underline. First, getting a community of founders that you like can, again, unlock so much.
Yep.
Support, investor pipeline, like just other ways of dealing and just more fun at events.
Yeah.
Like if your buddy's with you, it's a lot easier to talk to people than if you walk into a room by yourself and hang out by the cheese, which is where I usually am at.
Yeah.
Yeah.
I actually heard a story about two founders, both female introverts, and were super nervous. And what they did is they split up and they went and talked about each other's companies.
Oh.
So it felt like it took the pressure off. They were excited to brag about their friend and what their friend is building, but they were embarrassed and felt like it was bragging if they talked about their own.
Yeah.
So I loved that approach. And it was, this founder, you should hear what this founder is doing. Let me bring her over. So then it's more of almost like feels like a warm intro might be if in that situation.
Yeah,
so
hype woman.
Yeah, you have a hype woman. Yeah, exactly.
Everyone needs a hype woman.
Yeah.
The other thing that I wanted to talk about was really building in public. You have to be okay with being not all the way there when you start, because you're making it happen.
Yeah.
And I've seen that with this podcast. I've seen that with other things that I'm working on. Is I don't always know how I'm going to get to the end, but things happen as you make progress and you have momentum and people see what you're doing.
Yeah.
Doors start opening.
Totally. Yeah. And there's, by talking about it, you can say, I did not, well, this is the result that I got. I didn't expect it. I expected to get this. Or you can ask for help.
Yeah.
Hey, I know I want it to get here. Has anyone else done this before? If you've built a community and built relationships with people, they'll jump and be like, oh yeah, sure. Here's how you do that. Or here's how I did that. Or here's somebody that can help you do that. Mm-hmm. So I think there's a lot to be said. I mean, I started posting on LinkedIn 3 years ago, really 3 years ago. And it's incredible what it's done for me.
Yeah. Yeah, I agree. And also I've seen TikTok as a huge space.
Yeah. Because
I'm not on there. My kid doesn't want me to be on there. So we're negotiating that. But I do have a founder that I've worked with who created a community for her. This is Anna Hall with the Embody menstruation tracker. And she was able to launch and get 120,000 users on her platform through TikTok.
Yeah.
And she's not an influencer doing get ready with me videos. She is talking about menstruation.
Yeah.
And privacy.
Yeah.
And she's a normal mama too.
It's incredible. I started doing it in August because of another friend of mine. Do you know Nomiki Petrella? Yeah, she's amazing.
Amazing.
So she made me join it because we were going to do it.
Of Theana.
Yes.
.io if anybody wants to join. It's a great platform for women building in tech.
Yes, exactly. So she was like, well, I want to do a live with you on TikTok, so you got to join TikTok. And I made her do a Zoom with me to show me how to do it. So, and then we go to do it. And because I didn't have 1,000 followers yet, I couldn't do it live. So you had to move it to Instagram. So it's on Instagram if anyone wants to see it. but I started doing it and then I got COVID and then I stopped. So I got to get back into it. But I was doing it and I was getting pretty good results. In fact, fun fact, a sugar daddy reached out to me and wants to
Nice.
pay me $7,000 a month.
All right.
I'm like,
getting on
awesome.
TikTok
Yeah,
tomorrow.
right?
New sponsorship strategy for the month.
Exactly. Exactly.
Amazing. I hope that works out for you.
He's trying to make me go onto Telegram, so I don't think it's going to, which I'm not going to do.
Red flags. When
Yeah, exactly. I mean, there's so many red flags, right? But it's fun.
So we're getting towards the end. I'd love any hot takes you have on the work that you do, working with founders, investing.
It takes a long time.
Yeah.
It takes longer than you want it to and longer than you think. You have to be willing to practice and iterate. Your deck is never done. People are like, well, I just when I finish my deck, I'll send it to you when it's done. And I say it's never done. You should be tracking all the conversations and always iterating and making it better. One of my biggest tips for founders is that when you are pitching, record the call if you can, and then go back and watch it and see people's facial reactions. Write down every question that they've asked.
Yeah.
So that you can see, because you can see on people's faces when they get excited about something, if they light up and they're like, oh, that's cool. And it might not be what you think it's about.
Yeah.
And then also where they get confused. So if you're not speaking clearly, they're going to be like, what? Or you can see when they're distracted and you've lost them.
Yep.
So noting all those things as you're going through your pitch will help you get stronger.
Wow. Yeah, that takes some I don't know, resilience to watch yourself pitch after you're done.
But you're not watching that, you're watching them, not you. But yeah, I do think it's important though to understand, because their questions might not necessarily reflect their real opinions of things. So understanding what if they're looking for a way to say no, you can tell that when you see the questions.
Yeah.
But you might be able to see where in the pitch you lost them and then try and go back and fix it for the next one.
Awesome. I really want to thank you for being with us today. You know, we do this to make fundraising more transparent, to help founders understand what's possible, and really also get insight into the investor's point of view, you know, and their humanity. Because I think a lot of times it's like, oh, the VC didn't get back to me. Oh, this person ghosted me. Like, it's a lot of like, poor me, bad people. Right. And what you have to understand is that the investors have a whole lot of stuff going on. In addition to trying to find the right investments for themselves, they've also got their lives.
Yeah.
And sometimes it's not just about they're not intentionally doing something harmful.
Yeah.
Most of them, let's say. But I love hearing the angel investor perspective. It's incredibly helpful to founders. I would love to know also where we can find your AI twins so that other people can play around with it and actually get amazing advice from both your twins.
Yes. So they live on my website, themastheadstrategy.com, and you can navigate to guides and agents, and then there's a page there all about them.
So so that's the masthead, like a masthead of a newspaper, I guess. So
it's a masthead of a ship.
Oh, a ship.
Yeah,
even better.
That's what it's after.
Yeah, maybe I was just mixing my metaphors. But so the mastheadstrategy.com. Excellent. And I'm Helena Fogarty, and this was Inside the Fund.